Alright, so welcome back to a daily trading recap or daily recap. Um, I didn't take a trade today and I'll go on to why. But firstly, we'll do the bias. So we've got a daily fair value gap here that we respected once, and then this is the candle that I'm talking about, by the way. It's 4th of September. That's today's trading, and this is yesterday's trading. So we respected it yesterday and tapped into it again today. So going to the 4 hour, we've got 4 hour fair value gap, and we've got 1, 2, 3 tap-ins, and 4 counting this 10 a.m. candle. And so going on to the 1 hour, we've got one fair value gap here. This could be draws on liquidity because there isn't really much of a clear draw apart from this high and these equal highs over here. So let's mark that out. This is probably a draw in the future, like next week or something, but I am expecting these equal highs to be taken out soon. Going to the lower time frames, just to mention, we had 10 a.m. news. It was jobs openings, and that is a red folder. So this we inversed at 9:45, and then let me take this red line out because it's a bit. Let me just take that red line out. So we tapped into it again, tapped into this 4 hour again, and we rejected off of that. That gives us a really bullish, what's the word I'm looking for? Bullish signal, right? Yeah, and we also inversed this fair value gap, which is beautiful, exactly what I wanted to see. So we have lots of fair value gaps that signals price or gives us a more bullish bias than bearish, right? The only reason we could have been bearish was probably these fair value gaps here. That's basically it. I don't really see any other reason to be bearish, but because we have the daily fair value gap, the 4 hour fair value gap mixed into with a 15-minute inverse fair value gap, and then at news we went back into the 4 hour, came back higher, so rallied down, or had it move down, rallied back up. So that was probably the move to tell us that it was bullish. Okay, going to the even lower time frames. We've got this this news candle, right? Going to 1 minute. I didn't take any trades today, by the way, just to let you know. But I just want to say what I saw here in hindsight, so I can get that habit of seeing this before time than after, right? I can recognize this price before instead of after. So we take out both sell side and buy side, right? And we make a range, all right? I'm gonna start off by going through what trades could there have been and what trades would have been valid. Well, not valid, but better. It would have been more A plus, right? So firstly, we've got a fair value gap here, and we are respecting it. That could have been an entry, but it would have had horrible R, and it wouldn't it would have been a horrible setup, to be fair. But yeah, that's one possible entry, right? Stop loss at this first candle low. So that was the first entry that you could have taken, right? Second entry would have been here. So from this low, from this high, we've got fair value gap here, right? Okay, so from this low to this high, we've got discount fair value gap, and then yeah, this could have been an entry as well. So at that low, that could have been an entry, but again, it's not that great of an RR. Another entry could have been when this was inversed. This fair value gap here was inversed, which is at that fair value gap. That could have been another entry right here, and probably stop to this, to the bottom of that fair value gap, and TP would have been there, but the RR would not have been great. So what was the best entry on this price action? Well, we've got a fair value gap here that got inversed at this candle, right? And you might be asking, you might be saying this is probably hindsight trading. Yes, it is, but it's also logical on why I chose that fair value gap. So we tapped out this range, the equilibrium, right? So we tapped into there, and then we inversed that. That's a good sign of that's a good long. That's a good entry for a long. So usually fair value gaps like this, you would wait for a re-entry since price has already came higher all the way through there. So you'd either get into an entry here, and stop would be at probably this low, yeah, this low where the order block is. Alright, that's probably the stop that you should have. And to be completely safe, it could be here as well, but I'd say here is fine, because why would I say at this low? Because this order block is encapsulated within this order block, or this red candle, which means that this is the actual order block and not this. Alright, but why would I say to put it at this low? Maybe it's hindsight, maybe I'm biased, but what I see here is a fair value gap here, right? And in the 2016 ICT mentorship, ICT says to put it at the low, or the first candle low, or the third candle's high, depending on what you're doing. So if you're longing or shorting, right? So that would have been the entry, and this would have been TP, and going to 15 minute will be looking. So we've got 15-minute fair value gaps that I drew in here, right? And on the 5-minute, we've got fair value gap gap here. Okay, so you've got 15-minute fair value gap here, and a high right here. So essentially, we've already taken this fair value gaps high, so this one. So usually I wouldn't be taking partials or break-evens at this fair value gap. Probably this high would have been break-even, and then TP1 at this. TP1 at this high, at that high on the 15-minute. TP2 at this 15-minute. You could also wait for the inverse. So if you were willing to wait, which I wouldn't, because I like to think to pay the trader, you would have seen, if you were to wait, you would have seen this fair value gap inverse all of these, and you could have held throughout there. However, we didn't manage to inverse this fair value gap, so you probably would have gone now at there, or at this high. So put that at that high real quick. So yeah, this was TP4 maybe. Yeah, this is a bit scuffed, but that's probably how I would look at the market for today. I didn't trade today because I just didn't see this, to be honest. But yeah, that's it.